Hi, this is Stacey Dude with Coldwell Banker Tomlinson here in the Boise, Idaho area. I service all of the Treasure Valley, but today I am bringing a special person who is Sohayl Saboori from Flagstar Home Bank. He is licensed in multiple states throughout the country and a mortgage lender with a plethora of information.
I'm Sohayl Saboori. I'm with Flagstar Bank. I've been in the business a little over 20 years now. I've been in the retail side of the mortgage business now for a little bit over 8 years. And so, in all of those years, have been here in the Treasure Valley, helping both clients relocate here and clients that live here secure financing on new homes. It's been an interesting start to the year for a lot of businesses. Mortgage, real estate financing is experiencing a lot of things that we really haven't seen ever. And so whether you're buying your first house or you're buying your fifth or sixth house, the way business is being conducted today is going to be a little bit different than what you have maybe experienced on your previous transaction. And it's going to be definitely different than maybe what your friends have told you, even if they've bought in recently. So some of the challenges that we're seeing from a COVID standpoint is quite simply verifying people's employment and making sure that employment is still intact before we are able to fund and record on a mortgage. It's one of the last steps that we do on the mortgage side of things, is to make a phone call to the employer to make sure that that associate is still employed. And it's not the challenge isn't that the employee isn't still employed. Sometimes it's just getting a hold of the employer. A lot of people are working remotely right now, and depending on the size of the company and the technology backing, we're trying to call people on their cell phones and say, hey, is so and so still working? And if so, great, we validate that, and then we go ahead and close on the loan. Coincidentally, last week I had a lieutenant at a local police department securing financing, and I had to get in contact with their supervisor and put my processor in contact with them. And it was just something, again, not that it was difficult, it was just unique, because that's not something that we normally have to do. We just, we call the police department in that case and go, hey, is so-and-so still working? And it's done. We're not calling their supervisor on a cell phone on a Friday morning.
Right.
But that's the way the business is being done right now. And we have to be nimble, and you have to be able to work through those challenges to make sure that at the end of the day that the clients are taken care of, and that process still remains as seamless as it possibly can. I don't know that I've ever seen them be this low. It is a very volatile rate market. Especially looking back in the last couple of weeks, it's not as volatile as maybe it was a couple of weeks ago, but it's still considered a volatile market. There's a lot of speculation as to what's going to happen moving forward as far as interest rates. But in this snapshot over the next, currently the previous 2-3 weeks to today, it's a little more stable, even though it's still kind of in a volatile category. But moving forward, I think we're going to see rates down at the levels where they're at right now for the next at least handful of weeks, maybe even 6 to 8 weeks. And then we'll see what the market says and does moving into the summer months. But right now, depending on the term of your loan and the type of financing that you're securing, it's not terribly uncommon to be under 3.5% on a fixed mortgage rate. Jumbo market's a little bit different. Jumbo markets, it's backed a little differently as far as how those rates are determined and secured, and investors that are investing in those types of loans. So that those markets are a little different. But if you're in a conventional loan, FHA, VA loan, USDA loan, even an Idaho housing type mortgage, those rates are incredibly low right now.